was that the right move by the Monetary Policy Committee to raise rates by 0.5%?
Well, it was certainly right to raise interest rates. Perhaps they could have gone further, because it's quite clear that the interest rate we now have, 2.25%, is not going to be sufficient to get on top of inflation, which is nearly 10%, 5 times the Bank of England's target. So we're probably going to need further interest rate rises over the course of this year and into the first part of next year.
Should they have done more this time? There had been an expectation they'd go for a 0.75% rise.
Well, if I'd been on the MPC, I would have been voting with the 3 members who wanted a 0.75% rise. And I think that was fully justified. And we've seen in the United States them raising interest rates by 0.75% on 3 occasions. And in Sweden, for example, recently they raised interest rates by 1%. So other central banks are being a bit more robust and a bit more significant in terms of their interest rate policies.
Well, yes, and what do you think the impact of the mini-budget will be? As we were talking to the Levelling Up Secretary, he was talking about a raft of tax cuts, or certainly cancelling tax rises as part of this fiscal event. What impact will tax cuts have on inflation?
Well, I think the danger that we face at the moment, if you've got the Bank of England pushing up interest rates, trying to keep a lid on inflation and try and contain demand in the economy, and then the government with the other lever of economic policy, fiscal policy, putting a big energy price support package, which is going to be funded by borrowing. And then we'll see later today quite a few tax cuts are in the offing. And that's going to add to demand in the economy. So it's a bit of a push me, pull you type of situation with economic policy, with monetary policy, trying to dampen down inflation, but fiscal policy, tax and government spending policy, putting more money back into the economy.
So the two are working in opposite directions, the government and the Bank of England?
Well, that's the danger. And it depends on how people respond to the various measures that Kwasi Kwarteng is going to announce today. I think the biggest measure is going to be the energy support package, which people are talking about being 100 to 150 billion. But there's also discussion or newspaper talk about up to £50 billion of tax cuts on the top of that. So that's a very big fiscal stimulus.
Well, yes, and it's a lot of money being spent, but one of the points of the energy support package is not just to help people be able to afford their bills, of course, but won't it have an effect of dampening down inflation by limiting prices?
Yes, that's the sort of the positive side of the borrowing we're going to see a large announcement of extra borrowing. But the positive side is that some of that is going towards helping to ease the cost of living pressures. And that should help head off some of the wage pressures which could fuel future inflation. And that's one of the dangers that we face at the moment in the UK economy.
The Bank of England said yesterday that it's possible we're already in recession. Do you think they're right?
Well, I think it's not a recession as we've known it before. I mean, what they're talking about is 0.1% falls in GDP in consecutive quarters. Now, some people would technically call that a recession, but it's really a flat economy, because 0.1% is very close to zero. Previous recessions, we've seen GDP falling by, say, 1% in a quarter or even more. So I think if you want to call it a recession, it's a very mild one at the moment, and it's probably better characterised as being a flat economy.
Well, the government says that it wants to make sure that we're not in recession. They want to boost growth with their tax-cutting plans. Will it work?
Well, I think there are 2 impacts from the tax cuts. One is that if they cut taxes financed by borrowing, that puts money into people's pockets and they will spend it. So that's a short-term demand boost. But that brings with it the risk of inflation. We have quite a tight labour market at the moment. Unemployment's very low, vacancies are very high. So the risk is that in the short term, instead of fueling growth, we end up with more inflation. Now, the other argument for these policies is over the longer term, they will boost economic growth by stimulating enterprise and investment. But that is a much longer term process. That may operate over 5 to 10 years, but it certainly doesn't operate over 1 to 2 years.
Well, yes, and just while you're talking, we're just looking at live pictures of people arriving for Cabinet. I think I saw Kit Malthouse going there into number 10 just in the last few minutes, obviously ahead of this big fiscal event, as the government is describing it. So how worried are you about the levels of borrowing required for the government's plans?
Well, I think we have to see what the Chancellor says. We know that there's going to be a large amount of borrowing for the energy price guarantee. But as you said, that can cut both ways for the economy. It's helping ease the cost of living pressures. But if we get an awful lot of tax reductions in this fiscal event, when government borrowing is already quite strained, I think that is a worry for the state of the economy and for inflation.